could you provide like an overview what CPF is and basically how it's funded and how it's treated from a Singapore tax perspective?
Okay, CPF is a defined scheme in pension scheme in Singapore. So essentially, all employers have to contribute. So do the employees, right? So it works similarly in some countries like Malaysia. So in terms of tax-wise, for corporate, they get tax deduction for whatever contribution they made to the employees. And obviously, the individuals get a tax deduction at the individual tax level for the contribution they made. Yeah, so it's a pension that for PR and above, PR and citizen, right? In the past, many years ago, I couldn't remember. I think in Singapore during the industrialization, I think they do give CPF for non-Singaporean, non-PR, but no longer now. Yeah, no longer. Yes.
Yeah, thanks for that. Yeah, when I arrived in Singapore 9 years ago, and I remember when I started working in practice in Singapore, some of the long-term US citizens working in Singapore did at some point in time have CPF. So that's a point. So we get this question all the time, particularly from Singaporeans who may be moving to the US or from US persons in Singapore, whether you be a green card holder or citizen who may be considering a PR application to Singapore, or your PR might just be about to be approved, which may be the case of this person who sent this question through, right? So, as Bunyat says, it will reduce your taxable income from a Singapore perspective, but not from a US perspective. It does not. So by contributing to CPF from a US tax perspective, unfortunately cannot. It doesn't reduce your taxable income. In addition, the employer contribution to your CPF may be taxable as a benefit to you. So it may increase your US tax liability. And at the end of each year, you log into your CPF account and you get that statement because it works on the calendar year like the US. If you have interest, any return on the CPF investment, so the interest becomes taxable to you on your Schedule B. The CPF also would appear on your FBARs, so FinCEN 114, which will be your foreign bank account report. We need to include the CPF there as well. And if you combine financial assets exceed certain thresholds, it may also be on the FATCA form or the Form 8938, which forms part of your US tax returns. So the CPF is very important if it is as a US person and you're considering to become, it presents itself as a slightly additional compliance burden from a US perspective. But of course, the returns on that investment is, depending on your situation, of course, but it probably makes it all worthwhile. So good luck in your PR application.
Sorry, just to add on a little bit, just for foreigners, so PR who leave the country for good for Singapore and give up their resident status can actually get back from the CPF board all their money, right? That's not applicable.
That's a great point. That it is, if it is that, for whatever reason you decide to leave Singapore, it is you can cash out, and that happens all the time. We see that when someone, for whatever reason, things don't work out in Singapore and you return to the US, you can cash it out, and because you were declaring it every year on your US return, so it's after tax income, so you get it tax free. You take it and you move with it. So yeah, that's a great point. Thanks, William, for that.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.